Hey, VA borrowers. My name is Steve Doherty. I'm the Raleigh VA loan guy. I'm a loan officer here in Raleigh, North Carolina, and a United States Marine Corps veteran. Today, I want to talk about the residual income calculation component of a VA loan. What is the residual income calculation? How does it impact your eligibility for a VA loan, and what you should be aware of? Let's take a look. So first, what is the residual income calculation? It's basically a calculation to determine how much money you have left over after your monthly expenses, right? So when we calculate your debt to income ratio inside your mortgage file, I'm looking at a computer screen right here, we look at your gross income and we compare it to your monthly debt obligations, right? So student loans, car payments, credit card debt, other mortgage loans, that kind of thing. We get a percentage that we call your debt to income ratio. That does not look at all of the things that you spend money on. The residual income calculation, on the other hand, factors in more things, right? We look at the taxes that you pay on your income. We look at the likely cost of maintenance on the home you're trying to purchase. So it's a precise calculation as to how much you have left over. So what exactly is going on here? Well, the VA is very, very permissive in terms of how much you can do with a VA loan, right? You don't need to make a down payment. You probably won't have any kind of mortgage insurance. If you do, there's a funding fee, but it's rolled into the loan amount. It's not on a monthly basis, right? You can have a very, very high debt to income ratio. I've had files approved with a 72% debt to income ratio. That's crazy if you understand anything about mortgage lending. A conventional loan is going to cap you at 50%. So while the VA is very permissive, sometimes they can be a little paternalistic, right? They want to make sure that you have a minimum amount of cash left over every month so you can do things like feed yourself, right? They want to make sure you're not going to be completely house poor after you buy a big house. So that's what the residual income calculation is trying to ensure. Okay, so I touched on it a minute ago, but what in addition is the residual income calculation looking at? So we are going to take your taxable income and we're going to estimate what you will be paying on taxes in that. And then we're going to count that as an expense, just like your other monthly debt obligations. So we're going to add the taxes that actually come out of your income to those expenses to see how much you have left over. Right? So aside from the additional sort of cost to you of the fact that you pay taxes, Medicare, Social Security, we're also going to factor in the cost of maintaining a home. It's simple 0.14 multiplied by the square footage of the home. Right? So the VA understands that along the way, you're going to have some kind of home maintenance expenses, and they're going to count this against you when they're calculating how much cash you have left over. So we've discussed the additional sort of costs to you that will be factored in on the residual income calculation that are not taken into consideration in your debt to income calculation. Now let's take a quick peek at how your income is looked at differently. So non-taxable income in your file, when we're getting ready to run it through the computer, is grossed up, right? Because it's worth more money to you than taxable income is, right? If you make $1,000 from your job, you're paying some of that toward the IRS and to state revenue services as well. On non-taxable income, that $1,000 equals $1,000 when it hits your checking account. So it's worth more to you, so we get to increase it in your file. Well, on the residual income calculation, since we're trying to figure out exactly how much cash you have left over, we can't gross it up. We have to take it back down to whatever the actual figure is. So what else do you need to know about the residual income calculation? Well, the larger the family size, the larger the amount that the VA expects you to have left over. And I shouldn't say expects, I should say requires that you have left over. So if you have a family of 6, this means that you need more left over than if you're just buying a home as a bachelor or bachelorette. So be mindful that if you have a big family, this residual income calculation could factor into your pre-approval. We also need more residual income if your debt to income ratio passes 43%. Now, how will you know whether it passes 43% or not? You likely won't. But if your loan officer says something along the lines of, boy, this home is really cutting it close, right? We're pushing your eligibility or the boundary of your debt to income ratio to the max, then you probably want to make sure and ask them, hey, am I going to be good on my residual income calculation as well? So along that same vein, you want to be talking to your loan officer about this residual income calculation. A lot of loan officers who don't do a lot of VA lending don't understand that a residual income calculation has to be performed at all. Typically, it is done by an underwriter, but a good loan officer should be doing one upfront as well, especially if you have a large family, or if a large portion of your income is non-taxable. So if you're a 100% disabled veteran and you receive significant amounts of money from the VA, right? That's great when we're going to run your files through the automated underwriting system. But it's going to be drastically reduced when we're doing the residual income calculation. You want to make sure that the loan officer you're working with is well versed in VA lending so that they get you pre-approved, because technically you're pre-approved because the computer gives you a thumbs up, but then they stub their toe when it comes to the eventual residual income calculation. So I think it's a good idea to ask your loan officer, hey, is my residual income calculation good as well? So in summary, the residual income calculation can wreck your pre-approval. And not all loan officers are well versed in how the residual income calculation works, right? Maybe they forget to adjust your grossed up income back down. Maybe they don't understand that we have to include home maintenance on this. Either way, you want to be sort of pushy with your loan officer to make sure that they're confident that that residual income calculation is squared away and that you survived that test. Again, my name is Steve Doherty. I'm the Raleigh VA loan guy. I'm a loan officer here in Raleigh, North Carolina, and a United States Marine Corps veteran. If you have any questions about this residual income calculation and how it may impact your eligibility for a VA loan, please feel free to reach out to me. I look forward to hearing from you.